Hello, Tim Kerrin here from Mortgage Choice in Kingsley. I've been getting quite a few questions lately about genuine savings from people wanting to get into the home loan market. So I figured it's a good opportunity to just clarify a few things. So a lot of people seem to think that they need 5% deposit or 10% deposit or 20% deposit. One thing to clarify is that you actually need whatever that percentage is plus the fees. When you're thinking about if I want to get to 80%, don't think to yourself, I need 20% deposit. Think to yourself, I need 20% plus the fees, which could be as high as another 5% or so, plus whatever the mortgage insurance is going to be, potentially, depending on the situation. So I come across it all the time if someone's thinking that they have 20% and they're expecting to get an 80% loan and they haven't factored in the fees. So factor in the fees, and if you don't know what the fees are, that's what I'm here for. That's deposit, or what I might probably more accurately call funds to complete the transaction. So if you wanted to get an 80% loan, the funds you would need to put in to complete the transaction is the other 20% plus the fees. Let's call that 4 or 5%. So your funds to complete the transaction might be 24% or something like that, or 25%, depending on how high the purchase price is, how much the fees actually are. That's simply the money you need to get the deal to work, so that the lender only has to lend you 80% and is therefore comfortable with the risk they're taking, or 90% or 95% or something like that. None of that is genuine savings. That is simply how much money you need to complete the transaction. Genuine savings is a separate thing that is often happens to end up being the same thing, but it is a separate thing. It is a test you need to pass to show that you have the propensity to save up money or hang on to money over at least a 3-month period. And a lender wants to see that if they're taking a reasonable amount of risk in lending you the money, to make sure that you're the sort of person that they want to lend to. So at 80%, nobody wants to see that you've passed a genuine savings test. Having the funds to complete the transaction is enough. At 85%, that's where plenty of lenders' policies start to kick in, where they do require evidence of genuine savings. But they don't. If you're at 85%, you don't need 15% genuine savings or 15% plus the fees in genuine savings. You typically need to demonstrate 5% genuine savings, 5% of the purchase price. So if you're buying a property for $500,000, then you would need to demonstrate that you have $25,000 of genuine savings. But that's only 5%. If you're aiming for 85% as a loan amount, then you need to come up with 15% plus the fees. And separately, you need to pass a test demonstrating you've got 5% genuine savings. So typically, what I would see a lot in that situation is someone has saved up 5% and then maybe somebody's gifted the rest of the money to them to get them to 15% plus fees or something like that. So that often happens. Some lenders will go all the way to 90% as a loan amount before asking you to pass a genuine savings test. And Keystart, as an example, which is a WA government-owned lender, will go as high as 98% without requiring any evidence of genuine savings. That's a policy they changed recently. Until recently, they required 1% genuine savings, even though they lend 98%. So you can see in an example like that, you might have 1% genuine savings, but clearly you need 2% plus the fees if they're going to lend the other 98%. So the two things that need to be distinguished. Furthermore, genuine savings is a test you can pass in a few different ways. With any lender that asks for genuine savings, you can pass the test by saving up the amount, e.g. 5%, over at least 3 months. And I say at least 3 months, it could be 3 years that you've saved up the amount over. It just has to have been saved up over at least 3 months. So if you need, to use my $500,000 example from before, if you need 5% genuine savings, $25,000, 3 months ago your bank balance could have been $24,000, and then over a period of 3 months it reaches 25. That's still 5% genuine savings. Or it could have been nothing 3 months ago, and then you saved up $25,000 over 3 months if you're on a really good income. Or it could have been $15,000, and then over 3 months you saved up another 10 and got to 25. As long as it goes from some figure to 5% over those 3 months, generally speaking, that counts as genuine savings. Likewise, if you start with $25,000 and 3 months later you simply still have $25,000, that also counts as genuine savings. So if someone is willing to gift you $25,000 and you put it in a bank account and don't touch it, then 3 months later, that's $25,000 of genuine savings. Some lenders will also allow you to pass the genuine savings test, not by saving up money, but by proving you've been paying your rent on time for the last 6 months. Most lenders won't do that, but there's a couple of lenders who will. So for someone who's paying their rent on time every time for the last 6 months, and therefore can't afford to save up, proving that they've been paying rent instead solves the problem. And in that case, every policy I'm familiar with a lender that accepts that is not about how much rent you paid over the 6 month period. It's not a matter of getting to 5% in that case. It's simply a matter of, did you pay the rent on time? So that's a different way of passing a genuine savings test as well. So I hope that helps. And I think the things to keep in mind are, number one, if you're trying to figure out how much money you actually need to be able to buy a house, don't forget to factor in that you're the one that has to pay the fees. Number two, distinguish how much you need from how much genuine savings you need. How much funds you need to complete the transaction from how much genuine savings you need to pass a genuine savings test, because they're two different things. Number three, consider that if you can't necessarily save up enough, but you have a different way of getting enough funds to complete the transaction, let's say somebody's willing to gift you 10% plus fees, and you want to buy a house immediately, you can't wait 3 months for that to become genuine savings, then number one, in that scenario, we could go to a lender that doesn't require genuine savings up to 90%. And number two, if you do hang on to it for 3 months, then it becomes genuine savings. So there's a few different ways to solve the problem, but hopefully that helps you think things through. And if you've got any questions about your particular situation that you're not sure of as a result of what I've just said, or if I've made it more confusing as a result of what I've just said, please make an appointment with me. You can go to our website. If you just Google Mortgage Choice Kingsley, you'll find our website. There's a big book an appointment button there, and then you can make a time for me to call you, or have a video call, or a face-to-face appointment in the office. Thanks, and all the best.